Thank you, Thomas, for the nice topic, Geopolitics of Currencies. Piece of cake. Before starting, I have a question for you. We are obviously will be about to discuss the role of the dollar as the main dominant currency, but I would like to know if you know what were the most dominant currency before the dollar. Question to the audience. Come on, it's an easy one. No? Pound. So that was the easy question. Next one. Do you know when the US economy overpassed the UK economy as the main economy in the world? Roughly. This one is super difficult. You can just guess. 40s? 1940s, I guess? No idea? So there was please? No, way before. But this is my point. It was roughly around 1880. So between the Bretton Woods Agreement, which is basically the beginning of the US dollar being the main dominant currency, and the moment where the GDP from the US overpassed the one of the UK, it took 60 years almost. 60 years. So currency history, and this is my point here, is a very long time story. And I will try to tell you what I'm looking at when we are discussing this issue of geopolitics of currencies. In the current turmoil, you can monitor everything very tediously. Volatility in exchange rates, last discussion by Trump, or last tweet by, what is the new name? X stuff, by Trump, etc. Or you can take a longer view. And this is what I'm about to try to do with you. What I'm looking at the structure of the international monetary system. When I'm looking at currencies, what I'm looking at is one, does this specific event, decision, has an impact on institutions of the international monetary system? An impact on infrastructures of the international monetary system? Second, is there an impact for practices of companies, of economic players, etc.? And last, does it have a lasting impact on trust on currencies, and particularly on the most dominant currency, which is the dollar? So, having this grid of analysis in mind, I will tell you what I'm looking at currently. I'm not saying it will be after, in 20 years, the most silent features, but at least this is what I'm looking at now. By the way, if we go back to the story, transition between the British pound and the dollar, the most silent features were two global wars, the abandon of the global standard for the British pound, increase also of US dollar in reserve assets of central banks, this kind of stuff. But we cannot tell which event was the most striking one and led to the Bretton Woods Agreement. So currently, first thing I'm looking at, this is what I will call the questioning of the role of the dollar. I want to be very clear. The most dominant currency is the dollar, and this is, in currency history, certainly one of the most dominant currency. If you look at the composition of central banks' reserves, the dollar accounts for 58% of the total. Yes, at the beginning of this century, it was 72%. So there is a decrease, but there is no alternative. The next one is the euro, 20%. 58, 20%. There is no alternative for the moment. So what is interesting, this is that people are questioning at least. And I'm traveling a lot in emerging economies. They are questioning the role of the dollar. They are taking some actions. You have all heard about what the BRICS are deciding, etc. But structural impact is not there yet, but they are questioning. So this is something for me meaningful. Second aspect, and I will be brief, currency volatility. It's not the daily rates, the issue. The issue is the volatility is strong enough for many players to diversify from the dollar. Now, I was discussing the fact that the US is going from 72 to 58% of global reserves, but who was the main winner of this move? This is gold. Not another currency, this is gold. Gold came from 5% at the beginning of the century to 20% now. So meaning that no one is trusting any currency, I'm a bit pushing too far, but less than it used to be in the previous period. Third element, obvious, the willingness to build economic blocks. If you want to build an economic bloc, at one point, you need to have some management of the currency. So it's a long process, but it will have a structural impact. An emerging trend, a kind of restructuring of financial flows. Mostly, it doesn't change. Maybe some of you are economists, and maybe you've heard about the Lucas paradox. Lucas paradox is very simple. Robert Lucas was witnessing financial flows, and he saw, as we all see, that capital, the money is in developed economies with quite a low return, and developing economies doesn't have the capital, but they have high return. So in a normal context, money should flow from the west from the north to the south, at least from the rich country to the poor countries. This is not the case. It's called the Lucas paradox. Nowadays, no reversal for multiple reasons we can discuss, but we can see some movement, some actors for clearly other reasons pushing in the direction of diverting from the dollar, creating new payment system, new infrastructures. Mainly China, Russia, and others like Iran or Venezuela. Another silent feature, the acceleration of innovation in money, and I would say the dissemination of this innovation. Creation, you know, the cryptocurrencies, of course, but more interestingly, stable coins, CBDC, central bank digital currencies. Those ones may have an impact on the system. It's still very tiny, but it may have an impact at one point. Stable coins, it's like 250 billion US dollar in stable coins. That's something. It's meaningful. It might have an impact. By the way, super important, this is not challenging the dollar because 95% of those stable coins are backed by US dollar assets. So new way of sustaining the role of the dollar, but still this is feeding the role of the dollar. And last, again, I think there is a questioning also of the role of the state. In major countries, and especially in countries issuing major currencies. And this one could be big. What are the three attributes of a state, a sovereign state? Monopoly of power, internal power. Monopoly, meaning the justice, the police. Monopoly on external power, army, external relations, diplomacy, and the currency. So if you have a weakening state, what about the currency? So if you connect this with the innovation in monetary instruments, you may have also an impact. Okay, I'll continue. So now I'm a consultant. So I don't do prediction, I do scenarios. And based on those 5, 6, I don't remember, elements I've been explaining, I will try to figure out where the system could go. Scenario number 1. Imagine Easy to imagine because we are in it. This is a situation where there is still a dollar hegemony in the system, but this is challenged. And I think this situation may last for quite a couple of years minimum and maybe a couple of decades. I'm doing prediction now. Maybe it's too much. So this is one possibility. And for Europe, it means business as usual, but more risk, more volatility, maybe at one point a willingness to a bit change international stance on the role of the euro. You know, the ECB has a constant approach to the international role of the euro. This is neither hinder nor promote the role of the euro. Because what is important for the ECB, it's monetary policy, internal monetary policy. So officially, European authorities, monetary authorities, don't want to tackle the international aspect of the currency. So this one might change. In the second scenario, scenario number 2, let's imagine that the geopolitical shocks are increasing or stronger. In this case, we can imagine something not with an hegemon anymore, the hegemon being the dollar, but a purely multi-currency system with the dollar, with the euro, with the Chinese yuan, with maybe the Japanese yen, and maybe another BRIC currency. So imagine this multi-currency system, super unstable. But this is just I would say the currency image, the monetary image of the geopolitical context. Third one, the worst one. Because of geopolitical clash, we go to a more fragmented international monetary system. Fragmented into 2-3 blocks and a multipolar world, if I may say. One around the dollar, we can imagine, maybe one around the euro, I hope, and maybe one around the Chinese yuan. So in this world, it will be a world of decrease in international trade, because it's super difficult to trade between the blocks. It will be a world of limited liquidity, because it's very difficult to tap where the money is. If we need it, you need it in another block, etc. So this one, clearly, is not the one we are hoping for, but it's a true possibility. Last one. This is the one we promoted 15 years ago after the global financial crisis. It was a very European way of approaching the international monetary system and a very French way. Honestly, what I'm about to say now, it's an utopia. And if we go back to this scenario one day, this is because maybe you went to scenario 3, fragmented world. We discovered collectively that it was a nightmare. And then maybe we will go to the fourth one. Fourth one being a new multilateral monetary order, what we call the new Bretton Woods. This one clearly is out of reach nowadays. I will stop there.